All right, JJ the CPA here, part two. There were a group of wonderful individuals that had emailed their questions. And we were trying to do too many things this evening. So long story short, we're now gonna address those, and those that had sent the emails that we had replied to today on the 11th. I'm getting back with you on those. So the first one we have, is it with Tony?
Tony G.
Tony G from Florida.
This is regarding the employee retention tax credit. Please explain with an example inputting numbers on the form, what goes where. I had 2 payrolls in March 13th through 31st, first quarter, but form says 941 total. Checkbox equals first quarter. I had over 200,000 on 941, so what do we input and submit? Spreadsheet with 31331 employees. So my confusion is, do we put payroll numbers or the tax credit calculated, let's say 5,000 per each employee?
Yeah, great one, and you definitely deserve this credit. So I am gonna pull up the form 7200 real quick. The question that we've got here is related to the new employer retention credit. A lot of people call it the ERC, since we like throwing around PPP, SBA, EIDLA, right? What we're talking here is about the ERC, which is the Employee Retention Credit. It came out of the CARES Act, and what this is a way that for employers that paid their employees, even though they had, what happened? I'm just trying to get it. My whole head's in it. Employers that had paid employees when they were out due to COVID-19 restrictions, government closings, whatever you want to call it, they came up with this credit. And so it's a 50% tax credit, whatever you pay the employee. And it's up to $10,000. $10,000. I had a little accent going there. Up to $10,000 of compensation to each employee. So it would be a $5,000 per employee potential tax credit. And if, yeah, I know. If someone has paid an employee, $100, then their tax credit is $50. If they paid them whatever period of time that they qualify for this, they pay them $50,000. Well, the maximum compensation that would count would be $10,000, meaning the max credit is $5,000. So the question here, they totally are following all that. What they're talking about here is the Form 7200. And so it's as easy as you can think. And that's why I think the question that comes into play is, okay, is it really that easy? And so bottom line is, the top part of 7200, the thing to focus in on is in the instructions. What you would do is you would mark second quarter, even though the information came from first quarter. And what the IRS wants you to do is, when you fill out a 7200 and it includes information from first quarter, only include information from first quarter, period, the end, period, the end. And the reason for that is that the IRS, just working their tails off, got the form put together, got it out there, right? And you got to think, like, these forms are available to be print. It's not just PDF. Here they are, they're finalized, bada boom, bada bing, and it didn't include first quarter. And the reason for that is that I don't think anybody knew when they were creating this form that the Treasury would ultimately go and state that it's effective back to March 13th. I'm sure that the authors of the form and the instructions at the IRS were thinking it was going to be consistent with what the Families First Coronavirus Tax Act put into play for those tax credits, which those tax credits are effective April 1st and after. So it did seem very logical that, when the IRS was putting this together, it seems logical. It's like, okay, well, these other credits are going to be a 4-1 after. I'm sure this is 4-1 after. Why am I telling you all this? That's why you're not going to see a first quarter there. So you mark it second quarter, okay? And then When you're putting down here, you'll indicate check the box. So most of the time, regular, you're doing a 941. Thank you, Frederick, DC. You check box 41. You probably know that. Business wasn't was in play last year. Yes or no? And then, amount reported on line 2 of your most recently filed Form 941. So what I would indicate there, so for my clients, we already have 941 for first quarter. That's exactly what this thing's designed for, is that it's almost kind of like, oh shoot, I forgot to take it. I forgot to reduce down the taxes when I paid in my federal unemployment taxes, and shoot, I didn't include it on my 941. So what I'm doing, because I'm personally going to be filing one of these, okay, I'm going to be checking it for the time that I've got, March 13th through March 31. I'm going to check that box for second quarter. What I'm going to put down, the amount reported on line 2 of your most recently filed 941. I'm going to be putting that down on my 941 for first quarter. Now, because we're April 11th, if you haven't filed first quarter, then just put it whatever line 2 is on fourth quarter 2019. This is, I believe, just a verification for the IRS, just meaning that, okay, well, when we get this info, to know that this probably is an employer that's not scamming us, probably some scam artist isn't going to know what's on line 2 here of 941. And then enter the number of employees that you have. What I would do there, when I read the instructions, I think what you want to do there is put whatever is in on that 941. I think that's your most consistent thing to do. So for me, because I'm going to be reporting 941 first quarter info on there, I'm going to put the number of employees that I have on Form 941, okay? If you're using fourth quarter 941, fourth quarter 2019, then just, however many employees you have. I think it's just it's probably a formality on that, but I do think C is a verification. And then, it's as simple as line 1, put whatever your credit is, right? So let me go back to your question, and then you fax it in. The fax number is at the bottom there. And they have this example. They have 2 payrolls, March 13th through 31st. So you're just picking up the days. Doesn't matter. It doesn't even matter if the payroll period were to end in April for anybody else listening. You're going to just look at those specific days. You're going to look at what you actually paid. And then it says, what goes where? I had 2 payrolls, March 13th through 31, but form says 941 total. Check box first quarter. I had over 200,000 on 941, so what do we input in imprint? Spreadsheet with 3/13 through 31 with employees. So my confusion is to put, what do we put payroll numbers on the tax credit calculate? Let's say 5,000 per employee, question mark. So here's what you're doing on line 1. Forget all the discussion about quarter and any of that stuff. Forget it. All you're doing is this. From the 13th through the 31st, I don't care that it's 2 payrolls, doesn't matter about anything other than here's these 2 dates, here's these employees, and what did they actually get paid on the 13th through the 31st. Doesn't matter what 941 it falls on, doesn't matter what payroll period it falls on, none of that matters. What literally matters is on the 13th I paid these people this amount times 50%, there's my credit, so on and so forth. So hopefully that helps. And yes, it's a little bit of a cluster because it's wonderful that the IRS has done this. So when I say it's a cluster, I'm just saying, hey, we're in emergency times, right? Houses are burning down type of thing, and we got fire trucks running around everywhere. Congress is passing new stuff that the IRS is trying to keep up with, not to mention the IRS is not even probably at the office, and you got people trying to interpret what in the heck just got passed. Usually we do not have legislation that's implemented this quickly. So the IRS has had their work cut out for them, including the SBA, which is just another way to say it sounds makeshift. It is. but you're gonna mark that second quarter. Line 1 is gonna be your 50% figure. It is gonna be the actual credit that you're taking on the actual days that you paid the employees, the 13th through the 31st. Anthony, thank you so much for that. And get it faxed in, and then hopefully you'll get a refund quickly. I would love to know from when you faxed it in to when you got the refund, if you don't mind emailing me back. Just be good to know how quickly that's happening. What's our next one, Amanda?
Costas, first, thank you for all the hard work and help you are providing. I'm an architect that files as a sole proprietor with employees with a home office. My Schedule C line 31 is approximately $150,000 plus $30,000 SCP contribution and approximately $9,000 health insurance premiums. Based on the numbers, my allowable loan is approximately $39,375. Once I receive the funds, does that mean for payroll costs to be forgiven, I pay myself and qualified expenses as followed? And then he gives us his list of expenses.
Yeah, so let me go through this before the secondary question. So we've got an architect here, Constantine, right? Or is that the name of the company, you think?
I don't know.
Constantine, it looks like down here. I know, I'm asking.
I'm thinking, yeah, I think Constantine.
Constantine. So great question. And the first thing is the payroll will be maxed at $100,000, period. So it is 150, but only 100,000 will count, just the same as only 100,000 will count for employees on their wages. The next is, which seems really interesting, but the SEP all counts for the 30. Your health and benefits is the 9. So what you're doing is, I'm gonna have to borrow your calculator because we got all our other phones tied up. Is that okay?
Yep.
All right, so when where's your calculator?
Scroll, push down.
I wish that they had an option on iPhones that, you know how you can do like the keyboard sounds, Amanda? You know? I want there to be a 10 key sound. So like when I hit enter, go.
Yeah.
So you had said 150,000. I'm going to go with 100,000 because that's our max. Plus you had the 30,000. Plus you had the 9,000 in the health insurance benefits. So what we're dealing with here is 139,000. Okay. Then we take that divided by 12, and that gives us 11,583. Then we take that times 2.5, and that gives us $28,958. So the thing to note is that this would be the amount that you would be able to put as your max loan on your tax return, on your PPP application. Then, in terms of what is forgivable, you've got the 80%. And I understand where you're coming up with 80%, which is a percentage of basically your overall loan. But if this is the amount of your max loan, then we have to take 75% of that, okay? And, dang it, I just lost my math here. Was it 139? See, I'm used to working with a 10 key. Let's go here. Times 2.5 equals times 0.75. So I'm gonna do 75% of that, okay? So that's $21,718 that in essence goes towards quote unquote payroll. The rest can go towards the rent and the utilities, telephone, okay? But the one thing to note is inside the payroll costs, it includes the health insurance, the retirement benefits, okay? But when you're self-employed, I don't think this number really matters. When you talk about here that you're an architect, you file a Schedule C, technically this would be the amount of 75% when we're talking about on wages. You all right? Mm-hmm. But now when we're talking about the aspect of sole proprietorship, I don't think that matters. Thank you. which is all to say, you're limited to the 100, and when you're a sole proprietor, because you can use 100% of your money on payroll, at the end of the day, we don't know how that amount's going to get forgiven. What's the second question we got on Constantine?
As a secondary question to the above, the interim final rule states that the act expressively excludes the compensation of an individual employee in the excess of the annual salary of $100,000, prorated as necessary. Does this mean I can't use the $150,000 from the Schedule C because it is greater than $100,000, which will adjust my loan amount?
Boom. Yep, Constantine, you're on it, and so that's why I ran through that math. So the number I came up with would be the amount. But so to be clear, you get the 100 plus the SEP plus the insurance, but that line 31 on Schedule C is limited to the 100 grand. All right, thank you so much, Constantine. I appreciate the question, and I hope you're doing well, and good luck in getting this through. Let us know how it goes, and be sure to look at my website for the documents to pull together, which you probably already did, and the calculations.
Timothy, I filed my 2019 taxes, but I didn't owe anything or get a refund, so I was unable to submit my direct deposit information that way. I didn't file for 2018. I owe for back taxes for a year prior to 2018 or 2019, so I made a payment on March 27th using my bank information so that the IRS will have it to direct deposit the stimulus check. Do you think this will work, or does the bank information have to be on my tax return for it to be used for a direct deposit to check?
Timothy, you are a freaking genius. I never even thought of that. That is super, super, super smart. So you filed 19, so you didn't know anything or get a refund, so was unable to submit direct deposit, okay? So it sounds like you didn't need to file for 18. I owe for some back taxes. Hey, it happens to the best of us. It's just taxes, no big deal. Prior to 18, so I made a payment on 27th using my bank information. You know what? Let me know if that works. I know that the IRS came out last night and they allow you to go in and send in a form to change your address. Well, it's the same dang form that's been around forever and ever, Form 8822. But nonetheless, that's how you can do it. Then they do have a spot where you can, for non-filers, so if you hadn't filed the return, or you're not on Social Security, or you make a little amount of money, you can go in and fill that info. But the fact that you filed your 19, you wouldn't even be able to do that. Now, my understanding was the IRS was going to put something together for just your circumstances. So I think it's a great strategy. I'm really impressed that that's what you did. I don't know if that would happen, that would work or not, because typically with the IRS, it's almost kind of like two categories, where they have your banking information, but they have banking information for where they pull money from, and then they have banking information for where they send money to. Because there is a way that you can pay taxes by having the IRS pull it directly from your account. I've never known them, though, to use or be aware of that in the past when sending refunds. You would have to still provide the information to say, hey, send my refund here. So let me know if that worked, because you're literally a genius and that's smart. But if it doesn't, then they're just going to mail you the check. And if they have the right address on file, basically my understanding is those direct deposits will start going out next week. Although we did have somebody yesterday tell us that their daughter got it up in Pennsylvania. And then if it's not getting direct deposited next week, then it get mailed. So I guess we'll know probably sometime by the 27th of April what happened. But I really would appreciate it if you'd let me know how you ended up getting your money on that. So thank you, Timothy.
Triple R, I have a question with employment retention credit. Can an S Corp 100% shareholder claim employment tax credit on his or her personal, i.e. 50% of wages subject to wages for $5,000, whichever is less? Any help is appreciated. There are no other employees other than the shareholder?
So triple R, here's the deal. Yes, you absolutely can. And here's why. I'm doing it. I'm an S Corp owner. I got wages. I was at home. I wasn't doing any work. I wasn't able to do work. Our office was closed down. And I'm an employee like anybody else. But let me be clear on this. And I know that you're not asking this for this question. But I do know that I've had a couple others inquire of it in a different way, which is, well, can I go and pay myself when I haven't been paying myself to get the credit? And I don't believe the answer is yes on that. Can I pay myself more so that I can get a higher credit? I don't think the answer is yes to that. I think that if you've been routinely paying yourself wages, you're not then creating a circumstance, and I know you're not doing this at all, but you're not creating a set of circumstances to then get the credit. So I just say that with the caveat. If you're like an employee like anybody else and you have regular compensation, you pay yourself, here's the salary, and if you qualify, even though you're the owner, for the credit, then you take it. And to back up that position, you can include yourself in the PPP, which means that your wages count. So great question.
And triple R is on, and he said I've been paying myself the same for the last 10 years.
Boom. Yeah, there you go. And thank you for the question, because there's a lot of people in your position that owns an S Corp. Thank you. But I will tell you this for real quick. I like the name Triple R. That's like a great nickname. But anyways, I want to commend you though, because there are many S Corp owners out there, and I'm not at all shaming them, okay? But there's a lot of S Corp owners out there, and they don't pay themselves wages, or they're paying themselves, 12 grand a year, whatever. I don't judge. All I'm saying is, you're being rewarded for doing it in essence how the IRS wants you to do it, because I'm assuming that you were able to put in for the PPP, hopefully, and you're able to take advantage of anything else out there because you are an employee, you're on payroll. Doesn't matter that you're the only one. You are getting the benefits of being an employee of the business you created, because that's how you've been doing it. So for those that unfortunately are S Corp owners and they haven't been paying themselves a wage or very, very little, when they go to do that PPP, they don't have much that they can include. And then the net income on their Schedule K-1 is not considered self-employment income. And so anyways, all right.
All right, Lanny, thanks for
Thank you, Triple R.
Thank you for your outstanding work and assistance. It's been very beneficial. I know it could not have been done without Amanda.
That's right.
That's very sweet. Have an LLC that files a 1065, 2 members. Ooh, did you see that? Big lightning.
We had lightning?
Yeah, have an LLC that files a 1065, 2 members, 50-50 ownership, no wages, married individuals, so they can file a joint form 1040. The K-1 shows on line 1 and line 14 self-employment the same amount. To get PPP, would the LLC apply? There is no Schedule C. If they try EIDL, would it still be with the LLC?
I'm loving this. So when I emailed earlier, I said, first name is Lanny. Okay, all right. So Lanny, great question. I really do appreciate it, because this is a normal, like hot, red-blooded American great question, that there's so many that are in these great circumstances. So that's why I like taking these questions, and it's nice to get the emails. Sorry we didn't get you answered earlier. But here's the deal. So we're talking on a 1065, so we're now talking about a partnership. You got 50-50 owners, so they're getting a K-1. It shows 50-50. And when you have a partnership, it's a flow-through entity, like Lanny is laying out. And when you're looking at that K-1, I've talked about it from the beginning, you have a box 1 that's the ordinary income, but then if it is subject to self-employment tax, then you have box 14. So the first thing I'm going to say, Lanny, is that you've been doing it right in the sense of this is how the IRS wants this, okay? Meaning, when you have a partnership and you're actively involved in it, they want and expect that that net income be subject to self-employment tax. There's so many out there, and I teach CPAs across the nation, from Seattle to New York to Atlanta to Colorado to Phoenix, Atlanta, on and on and on. We've been to over 50 cities in the last 18 months talking to CPAs. And one of the things that I've been warning CPAs about is that the IRS is going to very much start cracking down on this. And it's a pretty easy crackdown. But for those that are actively involved in the partnership, they need to be subjecting Box 1 to self-employment tax by including it in Box 14. So as a side note, Lanny, I'm going to tell you that you should consider becoming an S Corp for 2020 and or 2021. Okay, and I'm going to tell you why in a minute, but the fact that you've been doing it correct, you've been doing it how the IRS would expect. And because of that, in some way, shape, or forms, you are going to be rewarded with this, because down at the individual level, that's what I would expect you would be able to file. Even though you don't have a Schedule C, you have a Schedule SE. So I'd be taking in that K1, that Schedule SE, and I would apply at the individual level. I would mark it LLC. I would, assuming you're an LLC. If not an LLC, then I would mark it as sole proprietor. If they don't like sole proprietor, I'd put it as eligible self-employed. We don't have a lot of direction on this. And you know what? Scratch all that. Scratch all that. That might be what is the eligible self-employed. So you know what? Check it out. If you would, I say mark it eligible self-employed, because then that's going to base it on the Schedule SE. Boom. Now, of course, your bank will give you final determination on that, but I just realized maybe that's what that eligible self-employed actually means. But the Schedule K1, the Schedule SE at the individual level, and then yes, you hit the nail on the head, you would have the partnership in the partnership EIN apply for the EIDL. And the reason that it can apply and receive the EIDL and not affect the PPP is that it would be getting it for purposes that have nothing to do with payroll. So I think that's the right way to execute it. And then of course, if you have 50-50 partners, and let's say it said married individuals. So let's just say for grins, if this was two married people that were 50-50, so then there's one individual return, they would do one PPP that would include all of the self-employment earnings. Now, if this was two different individuals, they're married, right? 50-50, 50% owners married to other people, then of course there'd be a PPP in each of their individual Social Security numbers. But then let me tell you this. Now, don't get me wrong. If you got it down pat, easy enough, having a partnership, if you're going to subject everything in Box 1 to self-employment tax, I don't know what kind of dollars amount we're talking about. That's fine, But here's the problem with that is that you have no control then on how much self-employment tax or Social Security Medicare tax you're paying in. So there's a million opinions on this. And of course, there's only one right opinion, and it's the opinion of JJ, the CPA. I'm just kidding. But when I'm talking to CPAs across the nation, I say, if you're actively involved in a partnership, really when you look at the law in the last 15 years, the S corporation is really a match for that. A couple of reasons why. Whatever that net income is, that Box 1 in an S corp is not subject to self-employment tax. By statute, by law, there is no Box 14 on an S corp tax return or on the S corp K1. Why does that matter? Well, if the net income is 250 grand on a partnership, then your self-employment tax, your self-employment taxable earnings is 250 grand. If you have an S corp, okay, and you have Box 1 at 250 grand, you're not paying any self-employment tax on that. Now, in an S corp, you do need to pay yourself reasonable wages. Reasonable wages is not 24 grand a year. But let's just say this, okay? Let's say for grins, you're an S corp, you pull out 250 grand a year. As a partnership, all of it's subject to that self-employment tax. As a S corp, none of it would be subject to the self-employment tax. However, you need to pay yourself a reasonable wage. let's say that you pay yourself a wage. You know, gotta remember, if you own a business, you're carrying many hats. I'm talking about just the hat as the employee. Let's just say you pay yourself, 100 grand a year, right? So in an S Corp, you're gonna pay yourself 100 grand a year. That will be subject to Social Security and Medicare tax. That's payroll tax. And in fact, the Social Security will be limited for those that are paying themselves, above 137. But in this, everything's gonna be at that 100,000 mark, right? But then on 150,000 of that other income, you're not paying self-employment tax. And this is where, depending on what age you are as a CPA, depending on, if you're a tax advisor that, more looks at, well, I don't know if I really want to file a separate return and it takes extra effort to do the 2553. There's some CPAs, some EAs, some tax professionals that, saving $1,000 or $2,000 a year is not enough to go and do all of this and have payroll and all this stuff and blah, 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 blah. But I am telling you this, if you're talking about numbers of above 100 to 150,000 of net income per each, when I go around the nation, everybody kind of has a number of when does that make sense to really be doing an S Corp. And for most people, it's around 75K, some 50, some old schoolers, they have no number, right? Here's what I'm just saying. This is all I'm saying. You don't even have to, you can swim on what I'm saying right here. But what I would want you to look at is, should you continue to be a partnership, or would it be better to be an S Corp? And I'll tell you this right now, your partnership can elect to be an S Corp. You don't have to get a new tax ID number. You're not setting up a new business. It's not a new entity. It's nothing new. If you're dealing with somebody that says you have to get a tax ID number, or you have to change what you're doing, or get a new bank account, you're talking to somebody that isn't following what you're trying to do. You're trying to do one thing, potentially, and that is become an S Corp. How? You file one little form called 2553, and you say, I want to elect to be an S Corp effective this date. There's some rules around it and the effective date. I'm not going to necessarily go through all that. I'm sure with whoever you're with is going to say, where did you hear that? And they might have very good reason to say that, because it may not really truly apply to you. But I will say this, I've made a career out of making sure that my clients are in the right structure, the right entity. And zero of my clients that have a partnership, not one of them, have box 14 filled out with self-employment tax. And the reason why is that all my clients that have partnerships, they're not actively involved in them. So it's not at all that I'm making some decision to go rogue and just say, well, I'm not putting self-employment tax in there because I don't have to, or self-employment earnings. I'm not saying that at all. The clients that I have that have partnerships, what they own inside that partnership, they're not actively involved with. That partnership owns other investments, other direct investments. It owns real estate. It owns commercial real estate or residential real estate. It's the activity inside the partnership. For my clients, my client is not actively involved in it. So by the law, my clients that have partnership, their net income is not subject to self-employment earnings tax. And it's because I'm doing it perfectly correct. When you have an S corporation, you are actively involved in it. You have to pay wages. So the clients that I have that have an S corporation, if they're netting 250 grand, they're probably doing $80,000 to $100,000 in salary. And then the rest they're doing is distribution. What are we saving here? We're saving on Social Security and Medicare tax, okay? And it's a better fit, okay? There's minorly separate rules related to each, but the fact that my clients are able to control then the amount that is subject to self-employment tax, which is nothing more than payroll tax, I like better. So I do know that there's CPAs and tax accountants and EAs out there. They have different opinions on it. And if we're talking net 250, but 100 of that is salary, so you have 150 going on a K1, there's also many CPAs, EAs, and tax advisors say, that's not enough, to have to mess with all that. I'm not quite sure what that means, because to prepare an S Corp return or to prepare a partnership return requires the same time. There's no difference in the amount of time to prepare either one. All that's happening is that a form's being filed, and then you'll hear, Well, but then you have to do payroll and you have to do all that. Okay, so if I run a little bit of payroll and I got a payroll company to keep up with, what is that gonna cost me? And yeah, if you're not gonna save but $1,000 in taxes, you may not wanna do it because you may pay $1,000 in payroll processing fees. I get it. Okay, so obviously you need to take a look at everything, but all I'm saying is that good job, like for real, I'm being sincere. Good job for doing it properly, that box 1 equals box 14, okay? And so at the individual level, that's where you're gonna get it. Mark yourself self-employed, use that Schedule SC, but then chat with whoever you're working with to say, hey, under current conditions, would it make sense as we move forward to be an S Corp? And if you say it like that, they're not gonna get on the defense. It'd be best not to say, I was watching some yahoo from Oklahoma on a YouTube channel that a lot of people are watching, because then that professional is going to be like, well, Jiminy Christmas, where are you getting your advice? He's on YouTube. Don't let your advisor get sidetracked, okay? Because it's irrelevant where you heard the information. What's relevant is you want it reviewed. And that's, I am just going to go ahead. That's what this whole book is about that I wrote, JJ the CPA here. It's actually not how to do anything yourself. My book is about how to work with your advisors better. It's how to ask them questions. I even say in this book, don't tell your advisor, hey, I read in this book that I should ask you this, or I read in this book, should we consider this? Because advisors don't want to hear that, okay? Pick whatever business you're in, you don't want to hear that some other person said you should do it differently, because I don't know your circumstances. But what I do know is that in this book, which I would love it if you buy it, it's $12.33, I reduced it. All I'm saying is in this book, that's one of the things that I bring up, is when you talk to your advisors, just say, hey, I just wanted to reevaluate what we have, and does this still make the same sense as we've always been? Because tax laws changes, right? All right, Lanny, thank you for the question. And let's see, did I answer all of it? Yeah. EIDL for the LLC, yes.
All right, next one is from Andy. I have some employees that make a base salary plus quarterly and year-end bonuses. Frankly, a large part of my income is awarded at year-end based strictly on hitting our total year EBITDA target. Is it possible to pay what would usually be a year-end or quarter-end during the 8-week period? Nominal amounts $5,000 to $100,000 per person.
You're not going to read the rest
Your
of it?
videos have been great. Thank you for making them easy to understand. I told a great friend of mine that works for the Mathena family in Edmond to look you up.
Well, I appreciate that, Andy, very, very, very much. So if you are looking at the essence of this, is that Andy's wanting to do this right. And so I appreciate, Andy's inquiry on the front side so that you can plan. And here's my absolute thought on that in terms of how you go about this. So the first thing to note is, wow, sounds like a great set of circumstances. Let's see. So is this Andy's company? Yeah, I have some employees. So you sound like one heck of an employer, which is phenomenal. So the fact of the matter is, and you know this, when you put in the numbers to get your PPP, you included all of that, rightfully so. I mean, it even says in the law, in the 1102 section of the law, it indicates include commissions, blah, 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 bonuses, sick leave, vacation time, you name it. Basically, if it's on the W-2, include it. Nothing was excluded as long as it was basically on that W-2, i.e. 941. So given that you got a loan that was based on that, you almost have no choice but to pay out a percentage to the employees, okay, if you want it all forgiven. So I think we've got two circumstances here. Number one, you don't have to do anything, okay? You don't have to pay out the payroll, okay? Now, don't be wrong. I mean, if you have the employees, you want to pay them, you're using it, you want to get it forgiven. But there's nothing in there that says, well, hey, if you borrowed, to pay these employees this and it included a year end, then you have to pay back, or you have to pay those employees that same amount. I don't think that's what you're asking, but I'm just making clear to everybody, you're just paying what you normally pay. But if you're trying to get forgiveness, so to speak, then yes, you would be allowed to say, okay, well, their bonus last year was this, which if you take that divided by 12 times 2.5, technically, that's what's been included. I don't think at all, though, you need to pay them any specific ratio related to that. You don't need to say, well, last year their bonus was $100,000, and so I'm going to take 100 divided by 12 times 2.5, and I guess I better pay them that now. You don't need to do that on the 2.5, remember? Because 25% of your loan can be used for other purposes besides payroll. I still don't even think that's really your question, so I'm just kind of going through what other people may be thinking about. But yes, if you want forgiveness, you would be allowed to give, in essence, those individuals bonuses because you're not paying them more than what you had paid in the prior 12 months or in the prior year, whatever you're calculating it on. That's really what they're wanting to avoid, is that you pay that employee more than what you paid in the past. Well, the more part is not just the salary, the more part would be what was the number included in your calculation. So I think you have a lot of options there for yourself, Andy, from the standpoint of, excuse me, if the employee is not, if they're not doing a good job, or you don't think you're gonna hit your numbers, or whatever the case is, and you don't think there's gonna be a bonus, I wouldn't pay it just for the forgiveness, and I'll tell you why in a second. If you do think you're gonna hit the numbers, you probably wanna really make sure the employees understand that, in essence, this is payroll. You can't consider it in advance. It can't be something that they pay back, because it has to be payroll in that 8-week period. You'd want to make sure that they understand how lucky they are that you're giving them, in essence, a projected amount of what it is that you're getting ready to pay them. So you have the choice. If you think they're going to be deserving, you can pay it. If you don't, you don't need to, because here's the thing. At the end, you can just hand back what you don't use, right? So let's just say that, I've got a client and they're going to get $1 million PPP. So the $1 million is going to sit there and it's just going to go towards payroll, assuming it's the same employees, it's going to go towards payroll. And so if you didn't want to pay any bonuses, right? You pay everybody out, and then at the end you're like, well, I borrowed this, I've got 15 grand left over. Well, boom, you just hand it back. There's no prepayment penalty, you just give it back, okay? Or, I hear what you're probably thinking though is, well, wouldn't I want to use some of this money to pay part of the bonus? Because if I don't pay it now and I just hand it back, then I got to pay for it myself later out of my pocket. True. So I would say opt for using it up. Opt for what is the amount that you know that employee is going to qualify for. Maybe you opt for going, okay, here was our goal, and did we meet it in first quarter before this all happened? And then making a bonus based on that. But that would all be just managerial. It would be good, just a good business approach to it, to ensure your employees don't think it's just free money you're giving them, and then they expect you to pay them their regular bonus at year end, and pissed off at you that you didn't, and pissed off because you just gave them free money, if that makes sense. So I've had a number of my clients and their employees are absolutely making me very mad, because I have clients calling me and they're telling me that their employees are saying to them, which, how disrespectful for starters, well, you got to pay me anyways. You're getting that money from the government. You're just getting it for free. First of all, an employer doesn't have to get a PPP, number one. Number two, technically, the employer can just sit on it, okay? Everybody goes collect unemployment, you just sit on it, and then you pay it back at the end. Technically, everybody can go on unemployment, you sit on it, and at the end you go, well, I didn't use it, and the bank goes, well, I guess you can just borrow it. We do, in the 8-week period, have to use it for what it's intended, right? So I think you have to just be mindful, and I'm sure you are, but be mindful of how your employee is going to view this, because in some ways, I think you design it in a way that they are paid out part of their bonus now, but maybe it's a an amount that's less subjective. It's more, you can point to it. And that way, when you get to year end and you say, all right, hey, here's your bonus. Congratulations, it's 50K. Now, you had already met some of that amount that we're basing the bonus on. You'd already been paid some of that bonus. So therefore, here's what you're actually going to get at year end. But it can't be wishy-washy. It can't be treated as an advance. It has to be payroll. It can't be something that's paid back. So find a common denominator there for all the employees that, in essence, when you determine year-end bonus based on your EBITDA, you're able to say, boom, here's your bonus. But then you had earned this already. So part of what I'm getting at too is it may be that you just have some amount that you're paying back at the end because you kind of want to come up with a baseline of like, well, I know that the bonuses are going to be this. Because the other thing that's going to get you in a sling is, what if you don't hit the numbers? What if the employee leaves? And now you've kind of had the wheels come off a little bit for 2021 when all the employees are not having anything to go by for the prior year. And, you know, Jimmy that left got this bonus and then wasn't here at year end, or the coronavirus this or that. So just make sure you approach it carefully with your employees, which I'm sure you will. But you want to make sure your employees, first of all, are understanding of how awesome you are.
Andy says thank you.
Okay, you bet, Andy.
This one's for Lynn. I'm a salon owner and have mostly W-2 employees with just a few 1099s. When I filed my application, I didn't put in 1099s, so I just added them in. Didn't want to reapply since the Bank of America had asked for documents. I can just delete the 1099s when they look at my application. I'm an S Corp and applied for PPP. I recently switched accountant in 2020, so don't have 2019 941 and 940 payroll taxes, which my bank asked for. I ordered transcript for the above 940 and 941 from what the IRS and hope I will see it soon. I sent them a W-3 for 2019, which shows all the wages, and hope they will accept. I did send first quarter 941 taxes. Do you think what I have is sufficient enough to prove my wages that were paid? Thanks again.
Yeah. So great question. Thank you, Lynn. Couple of things on this. One, salon owner, mostly has W-2 employees, just a few 1099s. When I filed the application, I didn't, you can't put 1099s, so I added them in. So I just want to make sure the 1099s are not included in the payroll costs. I think that's what you're getting at, though, is that the banks did it to themselves, because the banks for a very short period of time had convinced themselves that people got to include the amounts that they were paying to individuals on the 1099, meaning you don't get to include who you pay on a 1099. And the reason is those individuals that receive a 1099 can apply for the PPP. So I think we're on the same page here, which is great. But that was definitely the bank's issue. Now, back to, can I just delete the 1099s when they look at my application? Yes. I'm an S Corp and applied for PPP. So the good thing to know is that because this wonderful salon owner is paying wages, that is why Lynn is actually, I'm assuming Lynn is a gal, but Lynn is actually going to be able to get the PPP because of the wages. So there are a lot of salons out there where they don't have employees or they don't pay anybody as employees, and therefore they wouldn't respond. So I say good job on that, Lynn. And then as it relates to switching to your accountant. So the thing to know is that, whether you're an accountant or a tax preparer or EA or just somebody doing it on the side, anybody preparing tax returns, 941s, 940, individual tax returns, we have to have a PTIN, okay? And prepare a tax ID number. So you're gonna march down, and that person's gonna give you those 940s and those 941s immediately, because the IRS requires that anyone that prepares those forms have to provide you copies of it, period, the end. And if they will not provide it to you, please let me help you file a complaint against them, because there are times that I have let go of clients It's been rare that somebody has let go of me. Typically, that would be some weird circumstances because I've only been fired just a few times in my career. But no matter what, I am providing that information to my client because I am required, okay? Now, if they don't, they've got to, on something they've prepared, you got a PTI in. I understand we're all home. You're not gonna be able to do anything in the short term. You did a fabulous job with going with the option of getting those transcripts from the IRS. I mean, bravo on that, like great work. But at the same time, if the person who's holding on to that, I'm gonna just try really hard not to get mad because that's not right. And I don't even mean just per JJ, it's not right. Like it's freaking illegal. It's a criminal act, okay? And if they don't provide that to you, then they're in deep trouble. So have you provided enough? Some banks are allowing the W-3 to be received and count. So I think you would be good there. It's great that you had the first quarter 941. I like that. I wouldn't be surprised though if the bank does want the 941s. If they do, then try to have them by getting a hold of that accountant. And I understand they may be closed. So it may be that you send an email, you phone call, you send an email, you phone call. Don't get me wrong. I would not want to have a client of mine, an ex-client of mine, email me 1,000 times, okay? But I'll tell you this right now, an ex-client of mine would never have to email me 1,000 times, okay? I have clients, prior clients, I hate their freaking guts because of either something they did or how they interacted with my staff. Like I hate them, okay? Because of how they interacted with me and my staff. But if they need something, we get it to them right away. Now, there might be a limit to how many times I'm gonna provide something to somebody, but I've got one yahoo that I can't stand. And if I saw him right now, I'd really have words with him and maybe get a little physical with him, okay? But he's asked 4 times for his tax return, probably because he's dumb and he's an idiot, okay? He's a total idiot, and that's why he's not a client of mine. But we just give it to him every time. So there's no excuse. It's wrong. That person should be reported. They should be complained upon, especially right now. Because I will tell you this right now, even if my worst enemy, and I don't have any clients are my worst enemy, but I can think of a client right now that I hate their guts, different from this one, because of how they treated my staff. And if they needed something tomorrow, they would freaking have it because we are in a crisis situation. So I don't know who the hell was your prior accountant, but I'm telling you right now, by 10 a.m. they better have it. And if not, there better be 1,000 emails in there, 6 million calls, and torture them on Facebook, because the most basic thing that a tax preparer should do, the most basic thing you are required to do, is provide your client a copy of what was prepared. And here is why: it's not even yours. We prepared it, but it is your return. We prepared it, but it is yours, okay? So I don't know what yahoo, give me their phone number. I can't wait to call them myself. I'm gonna have them, you give me their phone number, I'll take care of them, but you get that Form 940, you get that 941, and at the end of the day, I think you have enough documentation, but you better have it now, and you better get it now.
Focus Remodeling Company, I just wanted to give you a shout out and say thank you for all your nice comments that you've been commenting on, on tonight's videos, so thank you.
Thank you, thank you, thank you.
This is from Paul. Great job and very informative and clear. Thank you for all the information. It has been very helpful.
Thank you, Paul.
My company is a C Corp with W-2 wages. My wife and I are officers and file 1040-C with wages SE pass-through. I applied for PPP with the EIN from my business with W-2 wages only initially. I was assuming we would have to file a separate individual self-employed PPP with our officer wages, non-W-2 with social security numbers. This has been very confusing and the bank has no answers. Should we file all W-2 and self-employment wages together under main EIN or file separately?
Okay, so I'm gonna break this apart. Great question, Paul. All right, so my company is a C Corp. Hey, so my 17-year-old son is watching a movie in the theater room. So I was gonna see if you go shut the French doors there to block out some of the sound. Okay, so my company's a C Corp with W-2 wages. My wife and I are officers and file a 1040C with wages SE passed through. So Paul, are you on with us by chance? But what I'm gonna guess on this, if you're not on right now, is that when you say you file a Form 1040C with wages SE passed through, I'm gonna assume that you're paying a 1099 to yourself, and therefore at the individual level, you're filing a Schedule C, because a 1040C to me would mean Schedule C. Paul, on with us?
Yes, Paul is
Oh, okay.
on.
All right, Paul. Hey, how are you, Paul? Thank you so much. So clarify to me, are you receiving a 1099 from your C Corp? Well, if you're getting it, yes, beautiful. All right. I think you did it right then, Paul, because the C Corp would file based on the wages in it, just like you did. And then down at the individual level, you have your Schedule C, you have SE pass through, okay? So then when you go and file the application for your PPP at the individual level, being your Social Security number, it'll be the combined amount for you and your wife. So it'll be one PPP. And based on something I was talking about earlier, I think you mark it down as eligible self-employed. Now the bank may come back and say, well, we need it to be a sole proprietorship. But I think that if you have a 1099 coming from a C Corp that you own, I think the self-employment is a better match, but it doesn't really matter. It's like, quite frankly, it's whatever the bank's gonna take. But based on very little direction, if none, to what box you're checking up top, I think self-employed would probably be the better way to go, because you're getting a 1099. Then I think what the bank would want is your 1099, okay, your application. If you're putting it on a Schedule C, then your Schedule C. And if you're doing a Schedule C, it'll be based on that net, line 31. And then I would, for good measure, provide the Schedule SE, but put that PPP in at the individual level. And I think that I don't think you could at all include that at the C Corp level. I think it's very, very clear that you did the C Corp perfectly, and that only your wages could be included at the C Corp level, and no way, Jose, would you be able to include the 1099s at the C Corp level. So I think you've done it perfectly. Let me know if what you provide, which would be 1099, the Schedule C, if any, the Schedule SE, with that app, if you mark it self-employed, if they come back and they want it sole proprietorship, I mean, come on, banks, just process the thing. But anyways, I'd be curious to know what it is that they took for you. Dusty Silva had a question for us there. He was in our prior one. Hey, Paul, you bet. Thank you. So Dusty, on that, the definition of self-employed would be on your individual return. Do you have, thank you, Paul, happy Easter to you. It would be, do you have a Schedule SE on your individual return? That SE is self-employment. And self-employment income would be income subject to Social Security and Medicare taxes, which is otherwise known as self-employment taxes. That's the true, I mean, for purposes of what we're talking about here with the PPP, is like, well, what's self-employed income? It would be income subject to self-employment tax. Now, if you were to ask, well, how do you know what's self-employed, to then actually apply the self-employment tax rate? Like if we just pull it all the way back, forget on the PPP, it would come down to, in essence, are you actively involved in it, right? So if you just make an investment into something and you go over here and every once in a while a check shows up, that's not self-employed. If you're out hoofing it and bringing in business and you're doing it through your own business that's not incorporated, that's self-employed. So self-employed is, it's your efforts, or you've been given something that it's going to be subject to that self-employment tax, which would be a 1099 from a C Corp that's yours, a 1099 from an entity that's yours, that is 1099 miscellaneous, and or a K1 that's given to you that indicates self-employment earnings. But for these purposes, that Schedule SE is where we're at. So Dusty, thanks for getting back on with us.
Tom Hager. Hi, JJ. First, let me say I started watching your videos, live streams, and everything else about you in relation to the CARES Act. Totally enjoy them all and have learned a bunch.
Thank you.
I keep reading the below statement, and our tax jockeys keep telling me we can't do as you suggest, which is take the ERC from 313.20 to the receipt of PPP.
Yeah.
When PPP is totally spent, get the ERC again. This is what I keep reading.
Yeah.
The ERC does not apply if an employer takes a small business interruption loan under Section 1102 of the Act, which is referred to as the Paycheck Protection Program. Can you clarify this one? Many thanks.
Yeah, you bet. And this guy I love because he trademarked Mr. Social Security, and the reason I love that is that, we don't have it on here, but I trademarked JJ the CPA. So I like this. I like this a lot. He's a member of the NSSA. Yeah, go ahead.
Nope, and he's a CPA.
Yeah. Oh, perfect. Yes. So, anyways, yeah, I talked earlier about this. That, I'm going back and I'm looking at the law. Like I went down and dug in. So, when I first interpreted all this on the ERC. I'm lumping everything in with the Sick Leave Act as well as the Expanded Family Leave Act, and in Section 1102 it talks about how those credits cannot be used in conjunction, or if they are, it's going to reduce down. And then when we got the 7,200, I'm taking a look at it, and then it seemed like a few days later the IRS came out and then indicated, which I think we're talking Thursday night, hey, you can go back to 313. And then I did note that the IRS said if you take the ERC, or if you take a PPP, you can't take the ERC. So I did look at the law. I did, and actually it's in section 11. Yeah, you're talking 1102, which is exactly the law. If I look, it's actually in J. Section J of 11, just to bring it to it. And then did who's that gal that we said her name wrong? Kenda? Did she reply? Did Kenda reply this evening in an email? I'd asked her to.
I'm sure that she did. We have.
Yeah. Well, can you look real quick on one of them? I won't, because I'm on his right now. Okay, so, gosh darn it. This is a long way of saying, you know what? I'm re-reviewing this because from the perspective of, dang it, thought it was. I'm scrolling too fast. It's okay. It's in Title B, so let me find B. I'm going to read you what this says. Because when I was reading all of it, my interpretation was that yes, of course, if we are going to be using PPP money, then we can't take other credits, just the way that it specifically states that about the sick leave. And my gosh, I must have just passed it 6 times. Here, let me go. Did she reply or no?
She just said, I'm thinking you may not be ready to give an answer on ERTC yet, but that's my dilemma, see below. And
oh, okay.
then she just
Didn't we
email.
reply? She just didn't catch it in the live feed?
I guess, yes.
Okay, well, reply to...
She's on right now.
Okay, well, we did answer her question. I went through the whole thing on the video. So I think she had a meeting.
Well, and I messaged her back and told her it was 1 hour and 6 minutes.
Oh, okay. Well, maybe she didn't have time to go back and look. All right, so we're looking at Part B, and we're looking at, so if you're on live with us, this is what CPAs do, is we're up late, we're doing taxes. It's totally sexy, isn't it? This is phenomenally fun. It is for me. I've got my cigar. I'm getting in the code. I'm going back and forth. This is what I love to do. But what I'm trying to find here is the actual law of what we're dealing with, like the law. So everybody's had comments about what the IRS is saying, and to me, it's like, well, who cares what the IRS says? What's the law say? And so when I went and looked at the law, my conclusion has been, well, as long as we're not using PPP money, we can take a tax credit. What seems to be what the IRS is saying, if we were just to take the one sentence and take into account nothing else, as well as this one paragraph in the law under J, area J, is, well, does it mean if I take $5 of PPP money, I can't ever take any kind of ERC, period, the end? And I understand, it's basically a $5,000 tax credit. Maybe that's the case. I don't think that's the case. I really don't. I got to solve this because I've got clients that I said, hey, let's get, looks like we can do the 7,200. I said, get me the information and I'll verify what we need to do with this before we file anything on Monday. So we haven't filed anything. And then I've had a number of wonderful people that have said, hey, you're saying that we can do this, but the IRS doesn't say that you can. So now we're going to look at the law, and I don't know why I can't find it right now. Can someone tell me what section it is, since I'm just going on through here? What I told Kenda earlier, did we email it to her?
No.
Okay. I thought it was in B, temporary allowance modification. Does anybody know the section? Okay, here we go. I found it, 2301. Okay, so in 2301, it talks about the retention, employee retention credit. And then it does say right down in J. In J, it says, rule for employers taking small business interruption loan. If an eligible employer receives a covered loan under paragraph 36.7a of the Small Blah Blah Act, as added by section 1102, such employer shall not be eligible for the credit under this section. So don't be wrong. I mean, we all know this. We just take that sentence and we go make a career out of it. We can say, well, see right there, it says we can't do it if we took it. So if an eligible employer receives a covered loan under this section as added by 1102, such employer shall not be eligible for the credit under this section. And so what I want to do is, and I've been reading on it, but it's only been on air, so to speak, for me to be able to like totally digest it and go back and forth. But if all we're going to do is rely on one sentence, that's not enough for me. Okay, I understand it might be enough for some. Well, it says you can. So, I use a funny analogy of, well, I drive up to a four-way stop and it says stop. So do I just sit there then for the rest of my life because it didn't tell me I can go? The stop sign didn't tell me, does this person go first? Does that person go first? Does this person go first? Do I wait 3 seconds? Is it 10 seconds? Is it 40 years? Do I ever get to go? Am I waiting for a light? Am I waiting for somebody to hit me? I mean, just because it says stop, to me, doesn't mean anything. It says stop, but what are the rules around it? So, great question on that. I'm looking here. I see here in Rule J, it says, hey, for employers taking the small business interruption loan, you're not going to be able to get it. What I'm thinking, though, and that's where anybody that wants to email me any more insight on this, I'd love it, because I'm trying to come up with my own determination, regardless if it's for YouTube or not, but for my actual own clients, for my actual 7,200 that I have sitting waiting to fax in because I want to double check this, because I'm personally taking PPP. To me, when I go up to section 1102, okay, this was what? It was 11. All right, we're going to go to the next question here. I'm just going to write down. Hang on. 2301J. We're going to go to the next question in 1 minute. All I was going to say is, when I look at then 1102, okay, come on, goodness, this thing is, when I look at 1102, this is 800 pages. Okay, when I look at 1102, which is where we talk about the PPP, it specifically talks about those other two credits. It does not talk about the ERC. It does just talk about those two credits. And the only reason I want to get back to it is so that I can. Okay, so what's the next one?
Next one is from Kenda. She just asking the thing because I don't have another email from her, but she said, can I take receipts being down already at April 10th as basis for taking the credit now? Or do we have to wait till the end of the quarter?
Oh, okay, yeah, so that last video was so long, I think we're gonna have to break these up into hour segments, even as we move forward. So, Kenda, thanks for getting back on with us, and I really appreciate, I'd love to get, I know you're saying that's what the quandary is, but as it relates to the ERC, let's just move to the fact that we believe somebody can take it. When you're looking at the Form 702, at least this is how I'm interpreting it, it is an advance that we're able to ask for, an advance request. And then if you look and you're kind of inferring through the instructions, so to speak, you take your advance request, but think of like an advance request with an 1120 where you've paid in too much quarterly estimate, so you want a rapid refund. So you take your rapid refund. Well, what if something changes later? Then you pay it back in. If you look at the 7,200 and the intention of it is to get the money to our clients ASAP because the numbers are heading down. I don't think that we need to wait till the end of the quarter at all because of the fact that we can do a 7,200 every single time we are running a payroll. I mean, you can run it and do 7,200 because if we don't have enough payroll taxes being paid in, then we have to do the 7,200. Point is, I think you can take it now. If you find out later that you are your client's going in a different direction, okay, then you would have to make that up, or your client would have to make that up. And I think the reason that this is a quarter by quarter comparison is so that if you're in a set of circumstances where you get to the end of the quarter, you've made yourself whole. So if you took too much and now you had to give some back, and you took so much and you had to give some back, I think it's quarter by quarter. The other thing is, when I read in there, through April 30th, we have no penalties. It's kind of an ollie oxen free to figure some of these things out. So if you have a client, their receipts are declining, I would say absolutely get after it, get the money. If for some reason we get to the end of April and the IRS came out with some other interpretation here for us that you did have to wait, then I think you could give it back. So I think absolutely you're being a great advocate for your client and getting them the money now.
She said, okay, thank you. That is exactly what I needed to know your opinion on. Next question is from Tom Stark. Greetings, JJ and Amanda. Tom Stark here, founding member of the JJ the CPA International Fan Club. Received the great news that my PPP application was accepted. My wife was in tears.
Aww.
Thank you. Going to apply for the employee retention credit 313 to 331 as my dental specialty practice was shut down. On a previous video, I thought you said I could claim the ERTC credit for myself as the owner too. Is that correct? Sending 6 figures, thanks your way.
Yeah, I love that. When I replied, I was like, I never heard that before. Sending 6-figure, thanks your way. So let's see. What you said he was a physician, right?
Dentist.
Yeah, dentist. So Dr. Stark.
Dr. Stark, I know, what a cool name.
Well, I told him that too. I was like, I love that name, like Tony Stark. Let's go. Okay, so Dr. Stark, here's the deal. I'm glad that we circled back to yours because I'm going to be making a determination. First of all, yes, you get included. Yes, okay. But from some insistency from those that have said, hey, JJ, you're saying you can do the credit and the PPP. It's saying here you can't. So I don't like it when people tell me that we can't. I don't mean the people that have been bringing it to my attention. I don't like it. I have not built a career on the IRS says you can't. Okay. In fact, I hate I don't appreciate it when that's the explanation that when I have clients come to me And they're like, well, I talked to my last person and they said that the IRS said I can't. That's not enough of a reason, quite frankly, because IRS does nothing more than interpret the law, okay? I've never, in 28 years, ever had an IRS adjustment, ever. Ever, ever, ever. The IRS has never adjusted a return I've ever prepared. Which is to say, I know my crap when I'm gonna do whatever it is that I'm gonna do. This stuff is new, but at the same time, I wanna always do it correct. So that doesn't mean that I'm always right every time. What it means is when I go to prepare a return, the position I'm taking is correct. But part of the reason that I will know it's correct is that we didn't get a new law 13 days ago that's being enacted and interpreted literally 48 hours ago. So at the end of the day, Dr. Stark, what I want to do is give you the answer tomorrow. I'm going to do a video on it on my conclusion, and then I will send you an email with a link to that. So I do appreciate, but I will tell you this. If we get the ERC, absolutely, you are included, assuming you've been paying yourself wages. All right, next one. Thank you.
We made it to the end of the emails.
Oh, except.
Coy's is the one that you told him, let me digest all this and
Oh, okay,
call you
okay.
this week. Because Coy is actually a certified public accountant who found JJ on YouTube, but actually practices in the same town.
Yeah,
So
right around the corner.
so they are going to be hooking up. But
Yeah, we are fast friends.
we answered everybody's questions except for Kitty, and Kitty's is because it's being pushed till tomorrow. Because you said your reply.
Oh,
I'll
yeah,
answer
yeah.
you
right.
2 o'clock on
Right,
Sunday. So
yeah.
just a reminder.
So hang on, but for Kitty, we want to do that right at 2.
Yes, right at 2.
Or when I'm done saying hi to everybody.
Yeah, and just a reminder to let you guys know that we will be on tomorrow, even though it is Easter, we are going on and doing a JJ the CPA open house. We will be taking priority questions and answering them from the real estate community. We will be answering other questions as well, but those are going to take top priority. Tomorrow we will be more organized in this, and we will not have to do 2 shows. So for you guys that had to come back at 8 o'clock,
Thank you.
I really appreciate you guys, and thank you for being patient with us. Again, as JJ says, this is a free show. But you're gaining a lot of information, and we just love you guys so much, and we're so happy, and it's wonderful to see how many people that JJ is actually helping.
Well, thank you. Thanks for everybody that is tuning in. Thanks, Kitty. Thanks, Nancy. Thank you, Dr. Stark. Jay's Enterprise, thanks for coming back on. Dusty, that came back. And thank you for Kenda.
Yeah,
I think Kenda's going to be a research friend of mine.
Yes, she has been a rock star on all the comments, and
Yeah.
she has really been in there and answering questions that she
thank
knows
you.
and
Good.
kind of fielding
Good.
stuff. So I really do appreciate you, Kenda.
Yeah, thank you so much. We definitely are going to have to keep track of where everybody is, Amanda, because, we're traveling around, the country. So we have, we'll have to list it. We'll put it on the website where we know we're going to be. We'll be in Phoenix and
Yeah.
up in Oregon, and we're going to go to California and Tulsa.
Yeah.
And New York, New Jersey, couple of, I'm already booked up with
Virginia.
I'm already booked up with the group that I do seminars with through January 2021, at least all the ones that I feel like we can handle right now. And so
Yeah.
as we go into the areas, it might be fun. And then, hey, just in closing, meant to actually bring it up at the beginning, but we just wanted to get into it. I've been thinking about it for a long time and with Amanda, but we are kicking off, we posted our first pre-reality show episode today, just talking about it, but we are taking applications for the JJ the CPA HERE show, which is me showing up to help a client in need It will not be that they become a client. I'm not there to do tax returns. I'm not there to invest or become an owner or do anything other than what I do for my clients, which is take a 360-degree look at the business, at their financials, and making some suggestions on a few things. But then I love to just pull it all apart, look at it, get right in the middle, pull in the spouse that don't want to hear about anything, and pull in the kiddo that's working that doesn't ever actually work, and talk to the banker and pull everything together, because businesses are made up of numbers. I get that they're made up of people and emotion and services and reputation, but at the foundation, they're made up of numbers. And so it sounds boring, but look at me right now. Do I look boring? Do I sound boring? Do you think that I work with my clients in a boring way? The answer is no. So what I want to do is businesses that need help, and I don't mean that they don't know what the hell they're doing. I'm talking about because of this crisis, this is the time to look at the numbers. So long story short, we will visit that business twice. We'll have some pre-work. We'll visit with them. We'll do some interim work. We'll visit with them, and then they'll do some implementation. We'll see where it goes out, and then we'll go to the next one. So we're taking applications. We've already got 10 of them. I've already got 2 that I'm like, oh my gosh. And then we got a third one. I'm like, oh my gosh. And so anyways, I was going to take applications till April 30th. I put it up last night. It might just be done by tomorrow. So point is that if you know of somebody that could benefit from JJ to CPA, and I'm talking about a business, an overall look, I'm not doing tax returns. I'm not doing PPP applications. I'm talking about reality show. Here we go. You need a new bathroom. I'm coming in and redoing it and giving you the most beautiful bathroom you've ever seen. But now flip all that to what a CPA would do with numbers. All right, hey, thanks for tuning in. I really appreciate you all so much. Dr. Stark, thank you. Yeah, bless you. So glad, and I look forward to giving you the answer on the ERC. And I need the ERC, so I want it to be that we can take it. All right, hey, appreciate you all, and I'm sure the Easter Bunny is going to show up in the morning for you all. So have a good night, and we're gonna go have a drink on the back patio, and I'm gonna light up a cigar. It's been great. Thank you all so much. I really, really, really appreciate it. I see the comments. Yeah, Kenda, thank you so much. Talk to you all soon.